Hello, friends. Welcome to Finspirations 9. I am Sunil Thakker, and yes, it is tax time in Australia. In part 1 of the Tax Time in Australia series, we discussed about the rental property deductions and capital gains tax. Today, in our concluding part, we'll be talking about the work related expenses. Most of us, especially after the pandemic, where working habits have changed drastically, will be interested in claiming deductions relating to work from home. How one works from home impacts on whether home office expenses can be claimed. So, occasionally checking emails, taking the odd work call, or doing minimal work tasks are not sufficient, even if they are conducted from home. As you can see on the screen, I've listed out a few instances of home office expenses, such as electricity and gas, landline and mobile phone expenses, any internet expenses, stationary computer consumables, home office cleaning, and any purchase of equipments that cost less than $300, it'll be fully deductible. And anything over $300, you'll have to claim depreciation. There are two ways how you can claim home office expenses. One is the revised fixed rate method, and the second one is the actual cost method. Under the revised fixed rate method, for the current financial year 2023, the ATO has fixed a rate of 67 cents per hour of all work done from home. Under the revised fixed rate method, accurate record keeping is a must. You should have records of any timesheets or logbooks or rosters or digital calendars or time tracking apps which show the actual hours you have worked from home. Under the actual method cost, as the name suggests, one can claim the actual cost of running the home office and not just the nominal 67 cents per hour that one can claim under the fixed rate method. All the office home expenses mentioned above can be claimed. A record of all the expenses claimed and also hours worked from home has to be maintained. For any assets and equipment that we have purchased for over $300, we can claim depreciation. We have to maintain records that show the proof of the item that was purchased, the date when it was first put to use for work related purposes, and also we have to keep a note on the percentage of the work related use. We shall see this more in detail in the example that I have now shown. We shall now do a small exercise to see how the revised fixed rate method versus the actual cost method works. As you can see in the above example, Tom is an IT consultant who works about 3 days per week from home, which is about 24 hours a week. And he's maintained his timesheets. The record keeping is pretty good. A laptop, mobile phone being provided by the company, but he uses his home internet, which is about 50% work related. Also, he's worked out that 25% of the electricity from his home he uses for work related purposes. He bought a monitor, a mouse, and a keyboard for his laptop, but these expenses were not reimbursed by his employer. Under the revised fixed rate method, Tom can claim for the 3 days of work he does from home, which is 24 hours per week. You multiply that by the 67 cents, which is the nominal rate, multiply that by the 48 weeks in a year, which is 52 weeks minus the 4 weeks of annual leave. This comes up to $771.84. However, he cannot claim the internet or the power and the office equipment expenses under this method as they are already included in the 67 cents per hour nominal rate. Let us now have a look at how he can claim under the actual cost method. As we know, Tom uses 50% of the internet for work related purposes. And of the $80 a month, he uses $40 towards work related purposes. Multiply that by 11 months because he has to take a 1 month for annual leave. So 40 multiplied by 11 is $440, which he can claim. Tom can also claim 25% of the electricity charges because that 25% is work related. The total bill per year is $900, which works out to $75 per month. 900 divided by 12 is 75. The amount that he can claim is this $75 multiplied by 25%, which is $18.75. Multiply this $18.75 by 11 months, as you have to take off the 1 month for annual leave, which then totals to $206.25, which he can claim. Now, Tom had receipts for the monitor, which cost $200, the mouse cost $50, and the keyboard for $100, which totaled to $350, which also he can claim. So the total of all the three, the 440 for internet, the 206 for electricity, and the 350 for the equipment comes to $996.25, which Tom can claim under the actual costs method. So from this little exercise that we did now, we can see that Tom can claim $224.41 more using the actual cost method over the fixed rate method. Which brings us to this question of which method is the best to use. Really depends on your personal circumstance. We've seen in the example before that the actual cost method was giving a slightly higher deduction than the revised fixed method. But that need not be the case all the time. So it will be best to talk to your tax agent or your financial advisor or accountant to find out which method would be better and beneficial to you. So this year, the ATO is particularly focused on ensuring taxpayers understand the changes to the working from home methods and are able to back up their claims, provided they meet the eligibility and record keeping requirements. This concludes our two-part series of It's Tax Time in Australia, where we focused on the three key areas of rental property deductions, capital gains tax, and work-related expenses. Hope this information was useful to all of you. So please do not forget to subscribe and share this video, and also press the bell icon for instant notifications on such informative videos. And until we meet next time on Finspirations 9, stay inspired.